Good morning, everyone. Microphone check. Screen check. Looks like everything's working correctly here. Good, good, good. I believe. Yeah, okay. Welcome, welcome, welcome. Hopefully everyone was able to rest up and get ready for the day ahead and all that fun stuff. As always, on the left side of the screen there, make sure to read through the live trading morning prep PDF. Very important to go through and understand everything that is inside there. I just want to take a quick second to give a shout out to our latest members who joined overnight and yesterday. Thank you so much for the support. I'm pumped to have you on the family here with SSFTG, whether it's on YouTube or over on the main site. If you aren't a member of SSFTG or you haven't joined as a part of the YouTube family, check out the join button below the stream to gain access before our next private webinar, get access to the Discord chats, and you get that awesome badge next to your name here on YouTube, and that shows your support. Plus, it just looks really cool. If you're trying to figure out what it is exactly that we're doing here, look no further than the Day Trading Academy. You can find that over on SSFTG as well, and it comes packed with 19 plus hours of material loaded for you, not including the hundreds of hours of live content that we've got over here on YouTube and everywhere else. Please keep in mind, speaking of YouTube, the YouTube side does have between a 3 to 30 second delay, depending on where you're logging in from. But if you want to level up to the full VIP status, you can enjoy exclusive permanent access to our non-delayed live analysis stream via Zoom, as well as monthly VIP webinars, private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here and you're totally new, or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. So let's take a look at what's going on. We can take a look at, see if there's any news or anything going on now that FOMC is behind us, see what the charts are saying, and see what we can figure out as far as opportunities for today. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7 markets that we take a look at. And then just as a side note on that long that we were talking about in the Discord chat, there were a few different longs that we're setting up on the crypto side. I'm going to exit all of them but CHZ. CHZ I'm going to keep trailing. This feels like it's still got some potential here. So instead of fully exiting on CHZ, I'm going to migrate a stop up to like 54 cents or so, and then just let the rest go. But I'm out like 90%, so definitely a teeny tiny trail. just as a side note there. Take a look at some of these charts across the board and see what's going on. Looking at the Nasdaq first up, we've got some pretty movement. I think that's probably the best way to say it. We've got a lot of back and forth going on. Still super choppy, sloppy, but right at the end of the day, well, I guess technically that was the today, even though it was yesterday. Yesterday at around 7 or so p.m., we had that big jump to the upside, all the way up back above 14,000, and since then the market has rallied all the way back up. Not to all-time, yeah, it did, all-time highs again. Lordy. All right, well, we got this thing screaming all the way back up again. And it happened, of course, all in the overnight session. What better time for all of that to take place than without anybody in the U.S.? It's not like it's a U.S. market or anything. Not jealous or anything. Over on the S&P, we've got more continuation to the upside. Again, same thing. They are showing their strength. The S&P has arguably been way stronger than all of them anyway, so it's not really much of a surprise because it's already tapped into the all-time highs. It did it again. Now it's back again. I mean, okay, like nobody's shocked by that one. It just keeps going to the upside. Buyers are going to be looking for pullbacks. That's about all we've got going on so far. Over on gold, man, gold's got a potential V bottom that led into a V top. I think a lot of traders are trying to figure out what in the heck is happening here. If we look at this overall leg to the downside first and kind of see where do they want to play ball. Of course, NinjaTrader doesn't want me to actually know that information because God forbid the order flow actually work on this thing. We've got the POC, which I believe would shift on here at 1768 anyway, even after it went up. So realistically, it appears as though buyers bought in underneath the lows. And if we draw this across and kind of look at a few other reasons as to why they would want to be buyers down here, we've got structural reasons, not to mention volume support. We also have previous major structural reasons. There's a lot of things going on here. You know, at the time, it looked like it was pretty bearish. Quite an avalanche wedge to the downside broke out. Usually those avalanche wedges will pull back to volume, but they didn't even do that. It just went screaming to the upside. A lot of longs will have missed that move higher. So if we go and take that a bit further forward and drag this from the bottom, how are they responding? Accumulation. They're buying back into the dip. They're upset. They want to buy the dip. Buy it again. They missed the original rally up. See if they want to pull back the major VVP area at around 1768.3. That would be a really nice spot for the market to want to try to backfill. If we look at this as a larger pullback, right, if we zoom way, way out, and with the realization that the high was over here on the 21st, technically speaking, if we look at the overall volume cluster, they're still fighting over it at around 1780. And there is a concern as to what's happening right now. This is where the buyers, if they were going to break higher, you would have expected them to succeed and continue back to the upside. That's not what happened. It got just whacked all the way back down again. And when it came back, no buyers to be found. All of them turning into sellers, and we're seeing the market rejecting back down. So in the short term, this is definitely a major concern for gold. They've got some serious pressure to the downside that looks like it's running into some trouble. If we look at from the top to bottom and see what are these traders doing, they're trying to buy into the pullback. We can see the volume there at 76.2. Now they're underwater again. They were just, if that was their average, the assumption, then they were in profit by a good chunk, about 1-to-1. Now they're back negative again. That's okay. They're not going to give up yet. But if it goes back up again, and I mean, they're not going to hang around much longer, right? Buyers need to see this start coiling back higher. And that volume flip, oof, that's a little nerve-wracking. Crude oil strapping on the thrusters and screaming to the upside right now. Jeez. The overall movement that we've got going on, if we look at the pullback, which in hindsight we know was a pullback, although it's, again, pretty fair to say with this giant wick on the bottom. But what ended up happening? They accumulated down into the lows. What a shock. Now we've got the rotation back to the upside. So let's see what they're doing while the market's rallying back to the highs. And this will give us an idea. Right there, all right? So initially, it actually looked like sellers might have given it a shot here. Sellers trying to get an accumulation move to the downside. They got dumpstered at 62.40. And then we've got a little bit of profit taking. So the buyers likely taking some profit here. And then larger profit taking would be here. So realistically, we're still seeing profit taking volume. Maybe a potential of accumulation, but it's got a lot of volume to build up here if that's going to be the case. So, I mean, they've got to overcome this POC. That's no small feat. It seems like there's not really much standing in the way of this move. Just keep letting it go, I guess. On Euro, continuation to the upside. I mean, kind of, sort of. The big thing that stands out on the Euro is that big old trap at the bottom. Huge wick, big reversal back to the upside. Buyers screaming. So if we look at that overall pullback from the top to the bottom, which it had like a quintuple bottom, they eventually, again, accumulated down into the lows, and we finally have some confirmation. So these buyers, if their average is right around here and their stops underneath the lows, they've been handed roughly that 2-to-1, right? So their objectives in the short term has already been filled, which would explain why we're seeing some profit taking, a little bit of a deeper dip. So with that in mind, with this pullback mentality, if we zoom out a little bit further, that's where the problem comes in, because the euro hasn't stopped going up since the 31st of March. So in terms of a larger pullback, I mean, realistically, we've got to start piercing some of these major swings. Those would be the value pullbacks, if you will. So the major zone of interest would be if we can dive underneath at around the 1.20600s, find a little base, and then continue back to the upside with that move. And that would be a rotation off of the -1 DP. You've got major structural support. And if we look at the volume node, we already saw it was kind of hovering in there, but if we go up to before that next high was made, the next point of interest would be 485. So you've got a little bit of support underneath it. If we continue it back up, 485, you can, jeez, oh Pete, big old chunk of volume sitting there too. You can see that giant wick. So, I mean, honestly, if you're wrong, it's going to be fairly obvious, fairly quick. So we're kind of in no man's land right now. Nobody really wants to do much of anything. Buyers are buying the dip. But the question is this the actual dip? Because all of the other ones, it looks like they really took their time, found a balance, and then dove down again, and that still wasn't enough. This one here dove down again, still wasn't enough, finally got the job done. So these pullbacks seem to last a very long time. I'm by no means expecting this to be the low. More likely we see a low set in over the course of like 2 or 3 days. It's got some time. Over on Bitcoin, very, very nice ramp to the upside. Very obvious rejection off 55,000. Again, that is not a surprise in the least. We already know the buyers who averaged in on the lows. That's their 2-to-1 objective. Not to mention massive psychological resistance, etc. We are running into some problems, though. Massive undertow just continues to keep going to the downside. And although the market is staying propped up, they're starting to lose their ground a little bit here. So if we see more momentum to the downside, yes, that might be a deeper pullback for buyers to bounce this up. But remember, most reversals off of the lows happen off of at least an L3. Generally speaking, L4s, L5s. What pullback has this thing had so far? Like an L1? Maybe? Yeah, L1. So there is still a very good potential that we see this thing dive all the way down to at least an L3 at around 51,500s, preferably back to 50K, and even better at 48,500s, 49,000, somewhere inside there. Obviously, given the amount of strength coming in, the L3 is a little bit more favorable in this case, but that's kind of the way that this stands. It's just buyers don't want to buy way up at the top. They know there's resistance up at 55,000. Why buy the highs when they can buy another flush? And you can almost see it happening. Right? You've got that first push down, kind of reset into a new high, but it's sort of the same thing, right? It couldn't make a new higher close. So it's all one and the same. You've got the first drive down, led into the, one of these times I'll click the line, the second drive down, and now you're looking for the third drive down. And where would that put it? Boom. Right below those swings, right into the L2. I mean, I would prefer it to go a little bit deeper, but you know, you can see it. It just needs a little bit more the way that it's setting up. Now, it doesn't mean it can't get invalidated if the bulls take back over, but there's some definite problems. And in a second, we'll look at TradingView, and there is a huge problem on volume as far as Bitcoin goes. On Ethereum, all-time highs, continues to push higher. Nothing can stop Ethereum. All hail Ethereum. It is the leader. Not quite, but almost there. So I think it's got to go up like another 10x before it actually does that. But I mean, everybody's buying it, right? And this is what we were talking about. This is the scarcity side of things. Even if big funds, even if Goldman, PayPal, Venmo, Cash App, whatever, even if they don't want to participate in the crypto sphere, if they're going to be offering it and allowing people to transact it, they have to have Ethereum because that's how you pay for transactions. It's the gas cost. With Bitcoin, at least it all comes out of the same blockchain, but or not the same blockchain, I mean, but the same coin, if you will. With Ethereum, it operates off of Gwei or whatever, however you want to pronounce that. It's gas cost. They have to hold Ethereum, so they don't have a choice. They have to be a buyer. Which is why we're seeing this demand to the upside. It can even make low. Look at all these. It can't even make major lows. Every single time it tries, it fails. Not a single one of them. It's ridiculous. Ethereum, I mean, this thing is just screaming right now. Unbelievable. Let me take a look at TradingView real quick so I can show you what I was talking about here. On Bitcoin, pop this guy over here. It's on the 60-minute perspective, I believe. If we look at the overall volume structure on this drive lower, seeing, you know, what are traders doing on the way down? Are they buying? Well, let's see. Bum, bum, bum. This is the problem. This is the part I don't like. See the issue? If these were buyers, and that the assumption would be that that was their break even, there was already fairly obviously got out of break even over here, but now it's back, and it's just riding the struggle bus right now. You want to know why I don't want to be long on Bitcoin? That's why. What we need to do for Bitcoin in order for buyers to try to rotate up, the longs are long from the lows. They bought the dip, right? That's down here. Even after the giant bull bar, it's still way the heck down here. That's up like $4,000 or $5,000 from there. So buyers are long from super, super deep, and this makes a very logical point of interest to take some profit in. Seeing it pull back again, a nice higher low dip, that would be that L3, L4 dip back to like the 51,000s. Whoo, man, that would be nice. If we look at the volume from the bottom to the top, even though it was a little bit funky, we can see there are also some other problems. We've got issues. And we can't just use any tissues. We need that 4-ply. Sorry, SpongeBob is ingrained into my soul. There's some problems, and it needs to have a rotation back to the upside, and it's got to break above that 55, preferably get into like the 56, 57s, really get some proof. Looking at the Nasdaq here, after the FOMC, we did get the rotation back up that we were looking for. Ended up getting a fantastic rotation all the way back up into the highs. Just, again, like we were talking about yesterday, expensive seats. They were very expensive on the way down, but, you know, overall, it did end up doing what you wanted it to do, so long as you were willing to hold through FOMC. I approached it a little bit of a different way, because I was not willing to hold into FOMC, but I'll talk about that in a second. I posted the screenshot on it yesterday in Discord, just all of the all the arrows, so many arrows. So looking for new highs, and let's see here. There it is. So today is still forming. We did pierce into the all-time highs barely, but today does not have a higher open, so there's no adjustment in terms of the L1 or any of that structure. Bulls are still waiting to the upside. If they are going to continue it back up, the highest point of interest really that they've got, keep in mind, this is a daily chart, so this is going to be a century and a half away. Once this thing loads, at least. At some point. Hello? Oh, 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 oh. I see the calculating thing moving around. There we go. So it's obvious that they did build into the pullback in an incredibly dirty way, but they did build into the pullback. And eventually they did rotate back up, and since then it's just been screaming. Again, this is difficult to sustain, this amount of bullishness. It's not that it can't. Zoom out. It definitely can. Right? We know that it can. This is nothing new. The Nasdaq could stick at these highs for months, years. But what we have to approach with right now is that every time it's hit the all-time highs, it's been stuck. And any time that it's hit the all-time highs and failed, that's what we want to go back and pay attention to. So now we've got a little bit more interest. They closed above the highs. That doesn't count. They closed above the highs. That one doesn't work. Closed above the highs. That doesn't work. Closed above the highs. That doesn't work. Closed above the highs. That doesn't work. Closed above the highs. Now, I know these aren't all-time highs anymore. I'm just looking at the most recent pullback nodes now. How are they responding? So far, every single time they've closed above, it just kept going. And if it doesn't, it seems to really have some trouble for a good, month. Let's see. How about the major high? Closed on top of it, closed on top of it, finally above it, but it's still stuck around there. You can see all those wicks. So it seems like if it's closing on top of it, it's hovering around there for a good week or so. That's what we utilized last time, at least. Not many times does it actually close above and fail, though, huh? Or if it does, it's a big old wick. Interesting. We might be into some new territory here. There's not very many. Okay, here we go. The first time in... What's the date on this? 2020. The first time it actually broke a high and failed. It seems like they spent a good 3 days or so, 4 days underneath it before crawling back up again. Man, you got to go back a real long way to find that one. Very interested to see how today closes. All-time highs are at 24.75, at least the previous all-time highs. Looking at the 60-minute perspective, the market continues to drive higher. We can see they built their average in on that pullback. We were talking about that in the 60-minute. We're also talking about that from the larger perspective, and they really stacked up. But you can see they really didn't give much of a chance for buyers to respond. So that deeper pullback, oh man, those 960s, that's looking really, really nice. On the 15-minute chart, they're still holding the value pullback. Actually, I'm sorry. They held the value pullback. They went up to the highs. So from a swing perspective, buyers who were buying value, they could not break down below the lows. You can see, man, did they put up one heck of a try. We were talking about how a lot of times when buyers are buying value, they don't want to see it go down 50% more than that, right? Or half the distance further. And whew, man, they really put the heat on. But guess what? It did end up rolling all the way back up to the highs, and the 2-to-1 objectives were achieved. So sellers couldn't get the job done, and this is them giving up. It's just they chose 7 p.m. to do it. Really awkward timing. Not really much we can do about it. So now that we have this rotation back to the upside, obviously I would love to see the market pull back. But from the bottom to the top so far, at least, we can see what they're up to. Massively bottom weighted. Profit taking still. We haven't even broken the secondary node. Running into some potential trouble on these previous all-time highs again, but that's about it. Kind of curious, was there a response at actual risk? Yeah, there was. It held it down for like 8 hours. That's how strong of a response that was. I know it doesn't look very strong, but remember, right? We're looking at a 15-minute chart right now. So it bounced off of that. You've got, I'm sorry, not 8 hours. I thought we were on the hourly. Either way, one candle tested it, and then it held down for about an hour before finally getting back above it. That level was no joke. That was a big, big, heavy, heavy spot. A lot of traders took profit there. From the actual risk perspective, that was what just hit there, and now we've got the full target, which actually we're just coming off of right now. So the 2-to-1 buyers are waking up to some profit. And if it goes back higher, it's icing on the cake. Not really many buyers are going to want to add to it per se, especially considering that it's all-time highs. So we're going to really want to pay attention to the volume as we come into this morning session, and if they potentially top weight it. Right now, so far, it's still obviously accumulation, but it's hovering at around 22. Well, that's what you get from messing around with boxes. My cat literally had you know those little plastic sealer things that they put on those self-sealing envelopes that you pull off and then you can seal it. He had one stuck to his paw, and he ran all the way over here, jumped up on my desk just for me to take it off. Needy little bugger. Don't play in the shipping boxes then, huh? You won't have that problem. Got 6 minutes until the open, 5 minutes until the open. Right around the corner. First time in a while that we've seen the Euro session not directly on top of the Asian session. Kind of refreshing. Not so sure what to do with this information. It feels new. Typically, this is indicative of a trend, and the big responsive zone is going to be on what side of the Euro session they decide to stay on. Aggressive bulls want to stay above the highs of it. You know, I mean, they can chop around underneath it a little bit, but generally speaking, they want to spend the majority of the time above. If they don't, then very typically we'll see it slide to the bottom, where value buyers will try to come back in. From just today, from the bottom to the top, we've got volume stacked up right in the middle on the micro scale at 14,030. And now we wait. 928 is the next big zone of interest around the corner. Typically at 928, we see a little bit of fluctuation. That is that's the final drop dead point for the at the open orders adjustments, at least. As far as the news for today, since we do have a second here, Earlier this morning, we had the initial jobless claims that came out worse than expected, 553,000 versus the 549. Not a huge difference, really, but worse. GDP for quarter one came out better than expected, 6.4 versus 6.1. As we go into the U.S. session, 10 o'clock is the only other time that we have to worry about. Pending home sales forecasted 5%. The previous was negative 10. So we'll see what happens this time around. A couple FOMC members speaking, a few 4 and 8 week bill auctions. Not really much else going on. If you're a natural gas trader, today's Thursday, so nat gas inventories. Forecast for that's 11 billion. From just the cycles on the micro, we've got, I mean, basically an L3 into an L2. Now we're rejecting back down. The L1 buyers getting totally annihilated. $928. You can always tell when 928 hits. Nice jerk to the upside. We do have a very obvious undertow going on across the highs. Ooh, gold. Gold just got slammed. Whoa. Jeez. Again, I mean, that was the obvious concern, was that rotation off volume, but golly gee willikers, Batman, they lost it. Yikes. Nice short if you took it. 1 minute until the open. Jeez. Just got annihilated. Crazy move. Hey, hey, welcome, welcome. Good morning, good morning. Other things times 2. All right. 14,030 is the initial small little POC that was created there, but this is obviously popping nicely back up again. Into the open, if we look at the 15-minute volume cluster, those sellers who are trying to build in, potentially maybe even exiting a break even there for the bounce off 38. Right off the open. A little bit awkward in terms of timing, but it's there. S&P driving higher. Everything catching some really good movement to the upside. If they could get another dip back into the 38s, that would be the zone for buyers to attempt another shot at it. We're still dealing with that open volume. So that's an obvious concern. Scalpers will be looking for this quick little flush down here for a pop back up. Didn't jump the way that I wanted it to. I'm going to reduce the 1 at around break even, but I still like this area. I'm going to reduce again and look to see if they can grab this quick little flush down through 23s. Just a little more. Right down there. There we go. Oh, it didn't even give me a fill. Oops. I'm going to reduce quite a bit down here on this secondary flush, and if they continue another bear bar down, I'm just going to drop it. I'm not willing to sit through all of that. Yeah, I'm out. Did not get the continuation back to the upside. Oops. There we go. So the next zone of interest, now that they obviously slid through the top of the Euro session, is going to be back to the Euro session lows. From the larger perspective, again, we are in that zone of interest on the 15 at around 22. So this is where swings on the option side of things are going to start taking those longs. It's a little bit early, given that it's the 15 minute, it's what, 9:33? So as far as timing, it's super awkward, but options will be kicking off longs here. Now inside the Euro session highs. You can see the majority of the buyers built up their volume right around where I did, actually. A rejection here would be those buyers getting out at break even, potentially sparking a secondary leg. Not going in with any large size or anything, because this could also just be a trap before it jukes higher. If we get more proof in a retest, sure. Then I'll add to it on the retest, but it's super early to want to go in with too much. Got about 20 seconds until we have the first 5 volume node. Which is currently at 34. They're starting to backfill a little bit and allow sellers... Well, never mind. Geez, that thing was gone fast. I was going to say sellers an opportunity to re-enter with a little bit more, but they only gave me a chance for 1. For real? All right. Well, first objective off at 21. Golly. All right. See if they can go a little bit further down now and challenge the lows of this wedge. But keep in mind, this low down here in the 20s, this is where earlier buyers picked it up. So a strong enough bull bar here, I'm out. I don't want it. No thanks. When I see support off of earlier break-even, it's hard to see with all the arrows. Hang on. I do not like when I see that. If I'm short going into it and I see them defending their entry points and reloading, I would rather jump ship just in the event that they reload so hard that it pops the top. I'm not holding bags. We do have the rotation off of that volume on the underside. So buyers have obviously rotated off break even, and sellers are trying to get the rotation down too. So we've got a bit of a fist fight up here. These all-time highs are always such a pain. Is that a higher low? Nope. just kidding. All right. First 5 volume on the S&P. At some point. There we go. 875. Jeez, that's way up there. I'm kind of curious, although this really wasn't a pullback as much as it just went sideways. I'm kind of curious, where was the volume cluster in here? I would rather be a buyer there. $99.50. Jeez, what a bounce off that 3-press wedge low, huh? They did make a new low, so we can go over to that one. POC is bottom weighted now. Uh-oh. See if buyers want to defend this 25 quarter. Nice zone of support. I'll look to grab a smaller long. More on the swing side of things with stricter rulings. We're dealing with the open. But this fits really, really nicely. So there's a potential for a 2-to-1 swing long on the Nasdaq. So because I've got the full Nasdaq going, why is the daily the only one with... No. I'll put the micro on so we can still at least scalp something. And then I'll watch the 5-minute over here so we've got both. Go away. Let me zoom in. There we go. So I'll let the swing on the Nasdaq play out. And from the micro perspective, at least, this will allow us some scalping. Possibility in the very, very short term that volume's shifting. 25.50 is what buyers are accumulating down into right now as their average. Same spot, really, as the full-size Nasdaq. Bulls are trying to creep it back above the 25.50s. Tested it. It's actually 25 quarter on the full size. We're still in a major zone of interest on the 15-minute, on the 14.022. We've got about 3.5 minutes for that candle to close. 10 o'clock news, still got 20 minutes until then. Back up to 25 half. Man, the micro and the mini, they are super detached. There's some pretty big price discrepancies here. Goes to show you how jerky these things are, huh? All right, see if we can get a little bit of a snap back to these 2550s for trend continuation buyers now that we've got a bit more proof. Would be even better if we can get back above this previous swing, though. From the scalper's perspective, longs would love a quick little washout down underneath the 2550s, but generally speaking, buyers are going to want to see those 50s defended. As far as actual risk is 44.25. Still haven't really separated away from it yet. Just so I can remember where that is. On the S&P, still waiting for those 99.50s. Yeah, that's a mile and a half down there. Sheesh, what a sleeper. Yeah, that's right. You're boring, Nasdaq. Was it like it when I talk mean to it? Like, well, as soon as I said that, the thing popped right back up. All right. Hey, you're garbage, Nasdaq. No, you're great. You're great. It's the wrong way. Again, from the swing perspective, I'm willing to give it plenty of time. That's fine. But from a scalper's perspective, longs will begin exiting on that move. If they were built up, as an example, if they were built up into a lot more size than just one, that would be a really good excuse to start dropping at some. But from the swing, it's going to have to take it. It did, but. Now, we do have a big breakdown below the lows. Set to the tick. Of course it was. Good old Nasdaq. Those it'll get to the tick. They made it down to the lows, to the tick, immediately reverse back off. I didn't check my bushes well enough. $25.50 is going to be a big zone of interest, but now that I don't have to use the micro, let's bump this a little further forward. I gotta admit, if I saw something like that, I'd put my fist through my monitor. Monitors get expensive after a while, you know, and with the amount of times just this week that this kind of stuff has happened, I'd be out a lot of monitors. You get used to it. It's all good. Just keep. I obviously I'm assuming it's a joke, but do keep in mind that if you do find that something like this has put you on tilt, or thrown your psyche off a little bit, where you are not in a good place, you're better off stopping now. Because it's probably not going to get better. Just throwing it out there. So really do a psychological check when you have something that could be really annoying or like this, to the tick. Especially when it goes, you know, you'll see it go all the way back up because I got stopped out to the tick, right? Murphy's Law. So this thing will go all the way back up to the ceiling without me. You can't let that kind of stuff get under your skin. It's not personal. It just so happened that your stop happened to be right there. I know it feels personal, but again, do a psych check on yourself. Always good to evaluate. Realistically, from the swing that I was looking at taking, I don't want to be long anyway. The zone I wanted to support was on the 15-minute chart. I mean, sure, in the next 12 minutes, maybe this goes all the way back up, but this did not do what I wanted it to do. So I don't have any business being long. The reason I wanted to go long... Oh, thank you, Ziggy. The reason I wanted to be long was from the 15-minute volume pullback. Now it's going to have to reprove itself. Got another new low. POC still hovering in 25 quarters. They had to get the rest of the stops. Everyone thought they were safe. Nope. Man, I don't know if you guys have heard of, it's a singer or a band or whatever you want to call her, Poppy. It's like, I don't even know what genre to classify that is. It's wild. Really cool to listen to. The song that brought it up in my head was called Scary Mask, if you're interested. I'm measuring the L5 pullback on the MNQ for longs. That could definitely be the case. I mean, realistically, if we zoom out from the overall major lows, they're still holding it, right? I mean, it's a to the tick L5. Well, not to the tick, but basically. You just heard her the other day. Man, that music hits different. I like it. It's like J-pop metal 70s folk. Like, I don't even know what to classify it as. I don't know. Nice little inside pullback to retest the inside of the wedge. If buyers are looking for continuation up, they'll be looking to buy that. Remember, they just vindicted me out of the move, so I'm not going to be too quick to jump. I want extra proof, because I know I am not the only one that got tapped out down there. I want to see them jerk back above the highs, prove that accumulation volume is supportive, maybe even get above Euro highs, and then look for the swing from there. Right now, this isn't enough. This is just more failure. S&P, it's like 3 dojis back to back has done nothing. Wow. It's weird but quirky. Yeah, it's weird is an understatement. They remind me a lot of Silver. What's their name? Shiny Toy Guns. That's not as heavy on some of the portions, but it's another one that's like just sort of out there, but still really good. Talking about an album, YouTube. It's not real. Don't need any of that stress. More selling action to the downside. POC has slightly shifted now at 2075. That's fairly important because the way that it happened, right? We built that low is at 25.25. Then they made it up to the top and shifted it. That right there is a huge clue. That paves the whole way for the sellers to drive this thing through the floor. All the buyers that were long gave up on even trying to get out of break even. They said, screw it, just get me out of the thing. And they dumped it at 4020. Wow. What group is that again? It's the band is Poppy. Here, this is the song. Scary Mask by Poppy. It starts out like it's a 70s acid trip. And then goes downhill in a great way real fast. More continuation to the downside. Buyers totally gave up. Just gave it up. If it does come back up to 2075, it's going to be very important to see what happens there. From the S&P perspective, we already saw the top-weighted POC. We're already expecting a deeper pullback. This isn't a surprise on the S&P. It's a little bit of a different viewpoint. Gold is still getting smashed. So now that Nasdaq has broken through the major zone that I wanted to see it, right? That was the area that I wanted swing longs from. Now we've got to back up a little bit further and see, hey, where is this thing going now? Where does this want to pull back to? If we go back from the highs all the way to the higher lows, which are ridiculous, but you remember that volume node? I didn't think we would get down here, to be fair, but remember that volume node? Right down here? Down here in the 960s? That's looking pretty interesting, huh? Actually, let me do it the other way around. I'll do it on the micro, just so that I don't have to go the other way. Oy vey. This is the only thing when you choose the micro for that build-in. 1, 2, 3, 4, 5, half of one? What kind of stop distances are we dealing with? Yeah, I'm alright with that. All right. The break point, because I'm taking it on the micro, I'm already reducing my size. I'm going to be at half of a single contract. I'm going to operate this one a little bit differently, but the break point is going to be underneath the lows. And then the upside objective would be based off of that. And that would offer objectives. Oh, man, you might have to adjust that inside just a little bit. Might be more beneficial to try to plug in towards like the 57s or so. Well, there you go. Sheesh. All right, so the Nasdaq diving down into the major swing long point of interest. S&P is also hitting it. 99.50 to 250 for the scalpers there. As far as the Nasdaq now on this micro slide, first volume node, since I'm building in a little bit of a different way, I'm going to pop these ahead of these other major areas. That'll be 2 back up to the previous cluster POC. We know they shifted down right there, so if it gets anywhere near that, I would definitely be looking to drop at least 1 more. So that's 4 on up to the highs. Might make more sense to drop another one at the POC and then just see if the final one can trail. Just a better way to approach it. Oops. That's not what I wanted. All right, so the swing long I'm building in on the micro, so it clears the way for me to still be able to trade on the full size. The scalp objective fills on the S&P. $10 o'clock right around the corner here in about 3 minutes. That obviously will also have a big impact on things. Another reason why I chose the micro. It makes a lot more sense to be on the safe side rather than the risk side. Unless you're on the gambling end, then, hey. All in on Doge, right? Sellers heavily driving lower. I'm kind of curious what they do on this previous failed swing. Obviously, that one got slapped. So if it does slide a little bit lower, the next point of interest would be like the 920s or so. Wasn't that the same price yesterday? Man, 920 seems really familiar. Oh, yeah, it was. Yep. What a mess yesterday. Ugh. See, now in hindsight, it makes a lot of sense that we got out of that long with that stop loss at the low, huh? Obviously, in hindsight, there was also a chance to potentially get out at better prices. We talked about that on the way down. But this is why, when you know you're wrong, stay away from the hopium. Upside objective at the moment for the Nasdaq, I think we've got a lot of open space. Remember, this comes off the 15-minute perspective. So from the 15-minute perspective, obviously, I mean, this thing just went screaming down, so I don't really have a whole lot of choice other than larger risk. But that aside, right? Oops, I deleted the wrong one. Hang on. Pull my head out of my butt real quick here. There we go. 10 o'clock. This is when news hits. The zone of interest is going to be upside objectives back up towards the highs, and that's going to put it at like 14,060. So a significant move in terms of a reversal back to the upside. That's why you have to assume this type of move is low probability. The likelihood of me staying in this type of move, if I were to, and that's why I chose not to go with the full-size NASDAQ, because the risk, one, is very large, and two, the likelihood of success is not very great at the moment. As we gain more likelihood of success or more information that adds to it, then we can add more to it. That's the beautiful thing about the flexibility for micros. More continuation of the downside. As far as volume goes, they did build up a little bit into the 60s. Makes sense as to why. And now we're just underneath it. Volume is jerking up fast down here. Sheesh. Big distribution underneath that low. So it seems like the balance point right now is going to be around the 6350s. Holy cow. Howdy ho there. All right, well, if shorts took it, they just got slapped in the face. Let's see what happens on this next pullback. Do they get out? I have a hard time believing that sellers are going to get too nervous too fast with that move down, but the way that that moved feels pretty vindictive. That was tough. Nice slide back down. Still trying to get something going on the NASDAQ. As soon as it goes down, it immediately reverses back up, though, every time. Now that we have this big cycle to the downside, the other side of this would be the potential short on something like a WACD, which could also be setting up around here. The 15-minute did technically close above, and his current candle still has 12.5 minutes, so... Before the bulls are going to be able to take this up, generally speaking, they're going to have to bottom weight a POC or scream up so aggressively that they don't have time to and get back up to this one. Those are the two scenarios where bulls could still win this. But they're running out of winning scenarios. On the short term, at least. Still got like 12 minutes on the 15. Looking across the board on some of the others, we've got that big pullback on the Nasdaq. I'm looking at this more as a washout for continuation back up. Same for the S&P. Nothing else really, though. If we look at gold, I mean, we already know what happened on gold. Gold fell apart there at 1780 and just gave up the boat all the way back down. They're not going to be able to do anything until they build a POC down here. And now we can actually just continue this forward. We've got a new low. Crude oil doesn't have anything happening until 62.40. Maybe 64.50, though. That could be interesting. Euro pulling back a little bit further. Ugh. As far as the euro from the upcycle, oh, man, that L2, they still have a ways to go, but that 2960 area looks really nice. So the euro has a potential swing long if it wants to set up. That would create risk just underneath the lows, which obviously I am not a huge fan of. Putting a stop directly below a low always feels like you're just begging for it. Realistically, if this pulls back, I don't think it should really break even underneath this low, but technically risk does have to go to there. I'm going to play this one a little closer to the chest, though, I think. So euro's got a potential. That's about it, though. Nasdaq still has to develop a bit more. Whew, man, they are building a lot of volume down here, though. A POC shift down to the lows and then price bouncing back up would be nuts. I'm going to hold off on those objectives to the upside for now, just because we do still have like 10 minutes for this current candle. $14,061 is the major objective. That one for sure. Five's a really awkward number for partials, isn't it? 3, I guess. I'd almost rather see if we can get just one off as kind of like a bonus at 7.5. So I wasn't able to get any more. At least not yet. It's a big, strong rotation down. This could also be a potential for a avalanche wedge. It's running out of time. All right, market attempting to rotate back above that volume cluster. That's a really big deal. They haven't shifted the POC down, though. Got not a ton more to get that volume to shift either. Watching to see how scalpers respond to this 58 quarter, 58 area. Quick snap down into it. Look at the volume that's building there. They are building a ton of volume. Scalpers looking for a continuation pop at the very least. I was only able to get one. Nice little slide down there. POC shifting to 58 quarter. All right, well, I didn't get that fill down there. 58 quarter POC has shifted, so now all the buyers have to do is get back above that. First objective for scalpers are going to be back up into that zone. Nice little potential trap underneath the lows. The volume node's 58 quarter. That's the sensitive spot. A big wick is not enough for me to stay in that long. No thank you. Whew, yeah, look, everybody just jumped ship. They're like, nope, F this thing. Gone. Nope. Hard pass. They lost the volume. Now, on this side of things... Still hasn't gone quite far enough, has it? All right. $58 quarter becomes a major scalp zone, but notice what we just bounced off of. They just got settlement. They still technically have 4 minutes left on the 15-minute candle, too. If the 15-minute can't get the job done, then it's left up to the 60-minute, which so far has proven the volume node. And that still has 50 minutes left. Watch this 58 quarter. What would be the ideal situation would be for sellers to try initially and then get dumpstered when it pops right back above it and they realize, crap, I shouldn't have shorted this. Right now, it looks like a lot of buyers still potentially exiting at break-evens. See if they can jerk above the 58 quarters. Uh-oh. Now they're closing above. Nice little snapback for longs to try to reattempt a push back to the upside. Didn't get that fill. Upside objective at the moment would be up to like the 76.50s. We're right back on top of those 20s. This thing's just hanging out. Actual risk, because again, we know how the market loves to bounce around those. That 2-to-1 is right there. There, that made that a little bit easier. Then we can let that last one go. All right, well, while the Nasdaq's just hanging out, The S&P is on a little bit of a different perspective. Again, the S&P's been detached from the Nasdaq and all of those, but I mean, realistically, the way that this is moving, this is really hard to not want to be a buyer down here, you know? Sellers so far are holding the volume underneath on 58 quarter. It's still just, I mean, it's just messing around the same spot for ages. Zone down in the 43s are where things get a lot more interesting. Nice little dip back into retest the earlier buyer zone of interest at 41.50. It's also the previous inside swing low. And it's the final 30 seconds before they close out this 15-minute bar. There we go. Back down to settlement. Beautiful flush. Look at the response. I'll reduce a little bit around this area because that's the break-even point, but the majority of price action I want to see trading and triggering back up towards like the 58 quarters. Nice lift further up. Don't lose the 44 quarters too much now. Stay back above those 44 quarters. I've got my average all the way down in a perfect spot now to try to let this thing run. $58 quarters still the volume cluster. The Nasdaq's still just kind of fiddling around, not really doing a whole lot of anything. They start losing too much underneath these 44s. Yeah, I'm out. Every time the buyers try to get something going, they just can't get it done. We're going to have to wait for a really clean break. All of these most recent breaks have been, well, seemingly fairly clean in terms of the closes and everything, but man, I feel like I'm going to have to wait for something a heck of a lot more obvious now. Break back above, really shut down the sellers. This is also the WACD for the shorts. So from an option side of things, I know it's way low. I would hate to be putting on a put right now this far down, but options will be looking for shorts down here. That one's not so much my cup of tea. I want to see if they can really overdrive these lows or if they're going to fail, because we've seen the buyers reposition over and over and over again. Now, well, at least with the POC, I guess, they're building accumulation, but not very good looking. All right, 15-minute has closed underneath, so that is no longer a valid zone either. At least not at the moment. We've got to go back to possibly even a 60-minute. Let's see what kind of volume these 60-minute traders wanted to put in. The short-term trends are breaking down. The next zone of interest is going to be down in the 20s. And again, I have a really hard time not wanting to be long. That'll put me at 5, 6, put me at 8, so I'd be at an eighth of a contract. I'm still not even at a full contract. Nice. Love the micros flexibility. I think it's safe to say that that was a pretty strong rejection so far off of the all-time highs at 24.75. Yikes. Gold finding some support off the -1 DP, just kind of hovering. The euro not even close to the swing long area yet. That's down in the 209.60s. And here it all sits. Nasdaq. Just can't go a day without it, huh? Fair enough. Whoop. Nice pop back to the upside again. Still hovering around settlement. So far, let's look at the... I'm kind of curious how these sellers have been responding so far. On the ones that stick around for a while, at least. On the initial drive up, geez, just a brick wall of volume in the middle. Okay. That was all at the lows. Nice rotation back up. As far as actual risk goes, we can adjust that. 2-to-1 actual is now up here. Nice bull ramp to the upside. Now, the one thing that we do have to kind of think of here is this going to be a move that's just reaching out to get a previous break even? A lot of buyers will have built up inside of that move. And if we look at the cycle all the way to the downside, we can see that POC is shifted right down to 58.25. So again, you know, if we start seeing resistance there at 58.25, then that's a demonstration that buyers are potentially exiting even more. I'm not willing to go long anymore until we break above it and show some proof. $58.25 tests. What I would love to see is sellers trying to sell it initially because shorts will sell it. This leg up is very strong, though. And I want to see it pop back above him and put him on the back foot. From a scalper's perspective, at least, that would allow a lot of trading above the high of that 58.25. So far, there's been resistance there. Seems more like buyers exited a break even, if you ask me. Did the WACD play out still ensure the setup? Yeah, as far as the WACD goes, effectively, once we've hit that trend line, then you're looking at, are we in a proper zone for shorts? If you were looking for shorts, I mean, every moving average on the planet was down. So as far as timing, I think it did all right. It was a little early, but I think it's fair to say it worked. I think it's also fair to say that those buyers who were long at 58.25 got out. Oof. And it might still be attempting to play out, but honestly, the fact that it made another new high above it, that kind of, I want to see it cycle down and keep going. So, I mean, although it was successful technically, it would have been nicer to see a bit more follow through as proof. Very obvious divergence off the lows. We also are going into 10:30 right around the corner, so feel free to get those questions in. We'll get those covered for you. In the bigger picture, the only thing that's really standing out to me is the euro. I'm waiting for that at around 209.60. Uh-oh. My charts are frozen. There we go. What do you feel is the highest probability setup or pattern? First off, I understand the question. I want to preface it with that. But when I'm looking at a pattern, if I'm a pattern trader or I'm a setup trader, my assumption is that my probability is already bad. Pattern trading, generally speaking, is always going to be on the lower side of things because it favors 2-to-1s, 3-to-1s, larger targets. It doesn't necessarily mean that if trading it correctly, you can't get those probabilities higher, obviously. But just by default, a pattern in and of itself is generally no better than 50-50. Usually, typically closer to 35 or 40%, which means 2-to-1s, 3-to-1s, more the realm that you're in. So with that in mind, what's the highest probability pattern or setup? Any of them. Pick one. It doesn't matter. They're literally worse than 50-50, so it's hard to mess them up as long as you're trading with a 2-to-1. You know what I mean? Whether it's a breakout pullback, a wedge, a flag, it doesn't matter from that perspective. But no, that's why I wanted to start with saying I understand what you mean, because if I don't, it's going to sound like I'm a massive a-hole. Okay, I'm going to answer the question too, but I just wanted to preface with what I meant. So from the perspective of patterns, that's something that I'm already by default immediately thinking I'm a low probability trader. So as an example, if I were taking a Fibonacci trade, right? Everybody knows a good old fib trade, good old 618, right? If I'm buying a 618, well, what's my stop? This is where you can adjust the probabilities, okay? And this is why I don't have a solid answer for your question on probabilities, because it's flexible. Probabilities are all deterministic on what you do with the trade. As an example, if I were to buy here and this were a 50% pullback. Actually, you know what? Screw the drawings. I mean, I know I'm a regular Picasso here, but let's look at some charts. Let's look at charts that I know I can actually trust the volume on without crashing my computer. So TradingView, where are you? There we go. All right. So let's say, as an example, I wanted to be a buyer on, I don't know, throw a market at me, JT. I don't care if it's a stock, a future, crypto, whatever. Just throw something at me and we'll utilize that. That over there. NQ, baby. All right. I think on TradingView it's NQ1 exclamation point. Yeah. Keep in mind, this is delayed data because of trading. But at least I know that I can draw it across here and I'm going to get the right volume. So, I guess that's kind of the trade-off. In terms of the way that this is setting up, the movement, the way that we can adjust this, right? So let's look at this realistically. If I wanted to be a buyer, what are some very obvious points of interest that I could be a buyer in? Well, this looks like a giant range. So if I wanted to be a buyer realistically, I think it would be fair to say that I could be a buyer in here. And if it breaks much lower than like here, I probably don't want it anymore, right? I think that would be a pretty fair assumption. Yeah. So in this case, if I were approaching it in that way, then realistically, what would my target be? My target would be back up to the highs of range, right? So if I'm approaching it in this way, then realistically, from a pattern perspective, if I were just everything all the same 50-50, probably worse than 50-50, I have to approach this with a 2-to-1 in mind. So just by default, blank stare, blind, no context, just, hey, here's a chart. There's an order, bingo bango, right? Then yeah, I'm going to assume lower probability, 2-to-1, larger targets. You've got to compensate for the amount of times that you're going to be wrong. If I wanted to increase my probability, what better way to increase my probability? Well, the easiest way to increase your probability is to increase your risk. Nobody likes doing that, obviously, but that's the easiest way to do it. So the first way is by increasing your risk, and again, assuming that you're a buyer at the lows of the range. And if it breaks underneath this, I don't want to be long. That was the original scenario, right? Well, now that is scenario 1 for swings. But from a scalper's perspective, realistically, scalpers will look one more back and say, you know what? I bet I can bump my probability high enough, get a shallower target, albeit, but I bet if I put my stop back here, I've got a way better shot at getting a scalper's target. Now, a scalper's target is different. When you're talking swings, you're low probability. 2-to-1s, right? The big rewards, or more, preferably. Scalps, you are at 1 to 2. You are now inverse. You are risking twice as much as you are willing to make. That is difficult to stomach, and you have to be one hell of a trader to pull it off. I will just start off right there, for obvious reasons. But if a trader is able to pull that off and be able to nail these successfully over and over again, the probability would be a little bit lower, which is why it's so much higher. The likelihood of success on the trade is way better. That would be the first way to increase your probability, is obviously increasing your stop. The secondary easiest way to equate it would be like if I were long here and my target was 1 tick away and my stop was 100, I'm going to be right 99.9% of the time, right? It's just that one time just ruins the party. Same mentality with that, right? You're just playing with probabilities on patterns. Pretty straightforward enough, right? Now, if you want to increase the probability another way, purely from statistics, again, from a statistical standpoint, if I wanted to increase my probability, but I didn't want to use a huge stop, well, another way to increase my probability would be to draw my target closer to me. The best way to draw my target closer to me would be to average into a trade with a maximum risk. So again, if I were buying here and I wanted my stop underneath this low, if I were entering here and my target was, way up here at the 2-to-1, that's great. But what happens if the market does this? Right? Well, if it does this, I can utilize this as a secondary point of interest. Let's say it does like a higher low, maybe creates a little something going on here that you like and you want to go long. By going long again, that allows me the ability to draw my average in, A. So my average now would be between the two, which is a little closer. But more importantly, I can also measure from here to here and draw my target out at usually 1-to-1 or 2-to-1, which is going to draw my target where? Closer, right? I'm sucking my target in closer to me by adding more. Still maintaining the same risk, but you're approaching it a different way. You're adding risk in a different way, effectively. This is a little bit more complicated because a lot of times if you're in a good pattern, it's not going to come back. And if you're in a pattern and you're early, then you'll see stuff like this where you'll be able to build in. And if you're wrong, then you're better off getting out there anyway. But if you wanted to approach it another way to increase your probability, okay, this is number 3. Be late to the party. Period. just be late to the party. Let everybody else do all the work. Let them put all of the money forward. Let them do all of the hard work, heavy lifting. Let them take the couch up the stairs. You take the stack of papers. I got it, guys. What I mean by that is allow the buyers, if they're in accumulation pullback, like right now, this is a massive range, so there's not really a whole lot that we can do with this. But if we just take the overall volume profile, obviously it's going to be stuck in the middle. Makes sense. Buyers are buying low, sellers are selling high, blah, blah, blah. But what I mean by doing the heavy lifting, if these were buyers, and again, this is where we go into assumptions and context, and this is why things are, always contextual. And we're breaking away from the pattern side of things now. We're going into more of the psychological realm. This is where things can be adjustable, right? So if I want to be a buyer and allow everybody else to do the heavy lifting, then what better point of interest than to stack all of these things together, right? So we know that it was accumulation selling up to this point, generally speaking. Realistically, if we use the brain meats, likely just sellers all across the highs, buyers all across the lows. And we can see that reflected in the POC because it's right in the middle. What's everybody doing when it gets back to the middle? They're taking profit. They sell at the highs, you take profit in the middle. You buy at the lows, you take profit in the middle. Everybody's doing the same thing in the same spot here. That creates the POC. So what do I wait for if I want some proof? Well, if I want some proof, let everybody else do the heavy lifting. We've got the POC here. Great, cool, fine, awesome. We broke above, cool, whatever, fine. Broke above, cool, fine, whatever. Bam, we have a new high. There's my proof. We now have proof. Higher highs, higher lows. That's a trend. Now buy the pullback. Let everybody else do all the heavy lifting, all the other garbage, so you don't get chopped up in all this BS. Come back over here. Now, I know it's easy to say in hindsight, but a lot of times when you look at these candles when they first come back, like even here, even if you were a buyer here, Look at how simplistic that bounce was. It's just gone. Let everybody else do the heavy lifting. It's way easier. Now, if you can stack these things on more, like in this case, this is very obviously, yes, it's a POC, but there's a heck of a lot of structure here too. This is more than just a POC flip, anything like that. This has a lot of structure. This is also a new high. So we have trend continuation buyers looking to buy what? L2. Spike in channel, maybe they want to buy a little bit lower, right? We might not be done pulling back, but generally speaking, all the proof is here. Shouldn't break down to the here if I want it to go all the way back to the highs. Now you know why I'm long from the swing perspective over on the micro, but all right. Speaking of which, so now, again, this is basically in action what you're seeing. I'm drawing my targets closer to me. My stop on actual risk would be a little bit narrower. So my 2-to-1 targets are still hovering around there. Given that we've broken through the lows, I would be willing to operate in a, now that we've stacked up a few more, we've got that high risk scalpers targets. 1, 2, 3, 4, 5, 6. Can I fill in that little gap right there? So from actual risk, I'll reduce about 80% or so. Secondary objectives would be back to the Euro session lows, and then you can mitigate back up towards your 2-to-1. Still looking to do the same thing. Nothing's changed from that perspective. The only thing I've done is I've brought my targets down to me, so it's easier for me to get out. Another way that mitigation of risk was obviously on the micro side, but you get the idea. There's a lot of ways that you can play around with the numbers and things. But hopefully that at least kind of answers the question a little bit. The answer is not easy if you're going outside of just pure patterns and setups. When you start dipping into the realm of psychology, then things get really weird. And see, now look at it, right? It came all the way back down. It looks like you'd be stupid to buy it. Well, now it's gone all the way back up again. You see what I mean? Like internally, inside these candles, there's some incredible bounces off those when you stack them up on a lot of things like that. And the same thing goes for I don't know. Let's look at something else. What other market seems? I do have to find some more crypto setups. I'm kind of out of the money a little bit on crypto. Not out of the money, but just not sitting on as much as I would like to be. So I guess, while we're going down the list here, I know we're after training time, but let me answer the last question here that I see, and then I'll go over and see if I can find some setups. Do you see any value in price ladder trading? In price ladder trading? Oh, like on the dome? Not anymore. No. Personal opinion time. But it's super easy to spoof orders on both sides. When you're looking to spoof orders on the bid, on the ask, I just have a really hard time trusting anything other than executed orders. Executed orders, that's money where their mouth is. You know what I mean? That's they're ponying up. But just putting an order on the bid or putting an order on the ask or floating a limit order out, that's no commitment. I can cancel that at any time. I could also set an OCO order, which is some shizy tactics that you can do. But as an example, if I wanted to make it look like I've got a huge whale order, down here because I want to spoof that I'm going to be a buyer. Right. So what I can do is I can go down here. Let's say as an example, I'm short, right? Maybe I'm short and I want to take profit down here. Or maybe I'm long, but I want to buy. I mean, there's so many different reasons. I won't get into the reasons. For whatever the reason is, I want to spoof an order down here. What I can do is I can place my first order to buy, 50 contracts, which is still a significant amount on the Nasdaq, but 10 contracts, and then set OCO. And on the OCO, then place, then you place huge orders in the same spot. It's just, so effectively when the first 10 get filled, the others get canceled. Now, that's not always the case. I mean, you're talking like hedge fund stuff. So for traders like you and I, we can't utilize that. And the bid in the dome and all of that kind of, I just don't trust it, right? That's why I don't look at it. I never pay attention to it. Could it be useful? Sure. I don't find it useful. That's why you never see it on my screen. That's why I never talk about it. Oh, really? Oh, I apologize. This years ago, yeah. I mean, that's why I don't look at it. It's easy to fake out. It's easy to mess with. You know, back in the day, like 5-10 years ago, you better believe that you'd be paying attention to those types of things. And if you're good at order flow, you can pick up on those types of things. But algos are better at it than me. You know, HFTs are better than me in that sense. I can't respond fast enough to be able to utilize that information anymore. So I have to utilize, for me being, you know, human, I have to use executed orders instead, which would be off of the order flow, the volume profile, that kind of stuff. Because that's where they put the money up, right? That's where the trades were actually executed. At the moment, we do see a demonstration of accumulation volume down to 58 quarters, speaking of executed trades. And then it kind of dried up underneath that. So from a perspective of executed trades, I can't even consider going long until these shorts are out of the way at 58 quarter. Again, from a swing perspective. From a scalper's perspective, sure. I'm sure there's tons of opportunities to go long in here. And short and you know, a million other things, but... Yeah, and that's, I mean, that's just a future on stocks. When you're placing orders on stocks, isn't there an option to just hide orders? Like they don't even try to go behind the scenes about it. It's just, yeah, hide the majority of those. just show these. I'm pretty sure that's just a tickable option. The last time I checked. Do I look at value area high low? Not so much. I mean, it's useful information, but more so I want to see... I look at the extremes and the voids. That's where I put most of my focus in. The value area can be useful, but I mean, where they're putting their money up or where they're not putting their money up, I find more useful. In the context you can derive from that. So as an example, like when the market's falling down here, I could easily derive that was likely a stop run. Nothing had a chance to hang out around there, and the market just tanked underneath it. So that would be logically a stop run then. When the market comes back to that point of interest, I would be interested, right? The market has to kind of fill in that volume there at around that stop run point because it didn't have a chance to. Same here, another possible stop run right underneath the Euro session lows. So. How about footprint charts? That would be another way to look at executed trades, definitely. If I were going to look at any type of like ladder of any kind, that would be the one that I would look at. Actually, you'll notice I don't even have the value area highlighted on my order flow. Let me, like, if I did 10 and 40, it might make it stand out a little better. Again, I just, like, yeah, it's at value area lows, but they're constantly plotting. Maybe, like, yesterday's value, sure, if it is utilizable. You know, as an example, if you were looking for a long and we had a nice pullback to value area highs from yesterday, then sure. But again, one thing by itself isn't good enough. I need a lot of things to line up. Preferably 3, if not more. All right, final call for questions and we'll wrap it up. 4182 bouncing off of that area on the S&P. What is that line from? Must be from a larger time frame. There we go. The euro has not pulled back far enough. Nope, not yet. Still got a long time before that one. At least it feels like. All right. Well, that's going to do it. I'm not seeing any other questions coming in. So that will do it for today. As per the usual, today was recorded on the YouTube site. You can just rewind that at your leisure and watch that back whenever you feel like. Otherwise, though, if I miss any questions, feel free to send me an email. I'll get those covered for you from there, jhb@ssftg.com. I hope you had a great day of trading. Rest up, and we will see you all tomorrow, right? Finally Friday. See what Friday offers up. I don't think we really have any other news today either, so, man, glad FOMC's behind us. We'll see. I still like the long. Do you think the MNQ will recover? I like the Nasdaq long from the much larger perspective. Again, that's why I'm mitigating by taking the micro side rather than going full bore on the mini, because this, we're dipping down into some major points of interest down here. But if this doesn't hold, then realistically, it's a pretty wide open door until we start getting down here. So I don't want to float full-size mini type risk on that. This is the area where it's got to recover from. And it can slide underneath it, higher, low, get back above, something like that. That's fine. But, these 13,880s or so, that's a pretty big spot. I wouldn't want to see it get down much further through like the 840s, 830s. Then it's just kind of game over. Until we start getting back down towards like the 730s. For now, I like it. That can change. But anyway, fingers crossed, we'll still be in this one coming into tomorrow while it's going up to the upside. I say that every time, and every time I'm not, but one of these days. Otherwise, though, enjoy the rest of the day. Hope you had a great day of trading, and we will see you all tomorrow, right? Have a good one. We'll talk to y'all later. Thanks.